What's up, traders? Here, Chris Capri, Seconds Guys Trading. So today in our member coaching session, we had a very interesting question come up with a student who is going through a funded trading program. Now, for those of you who don't know what a funded trading program is, this is basically a program you sign up for. Generally pay either a one-time fee or an ongoing monthly fee. They evaluate your performance, and if you meet certain criteria, you get funded. Sounds great, right? I mean, if you don't have a whole lot of capital to trade, but you feel like you can trade and you pass an evaluation test, they'll fund you. Sounds like a fantastic deal, doesn't it? Well, when you start to look at some of the details, some things that don't quite add up. In today's video, we're going to analyze these particular programs. We're going to look at some of the details of their qualifications and what the kind of parameters they lay out, so that when you see it and you start to look at it in more detail, you realize that some of them are actually pretty good programs. Some of them, in my opinion, are really just business models that a lot of people aren't going to make these qualifications. They get a lot of money for you trying out the program, but they have to put very little risk out in knowing that most people aren't going to qualify. So in this video, I'm going to go over which ones do I think actually hit the mark, which ones are okay, and which ones really I think you should avoid. Now, it's important to note that all of this is my opinion. I'm not stating it as fact. I'm not saying it as a truth. This is just my opinion and my analysis and looking at their programs, their qualifications, and how they lay out the program actually works. So let's go ahead and jump into this here and take a look at some of these programs that are very well known and look at some of their qualifications and what I think you should be looking for in a funded trading program. Now, the first program we're going to start with here is TopStepTrader. And they have a pretty simple program in how it works. You got to prove you can profit, you got to show you can manage risk, and then they will fund you and you will start making profits off this. And they go a little bit more in detail about this here, and this is where it starts to get interesting. So you have different programs you can start with. You can start with 30K, you can start with 50K, you can start with 100K, you can start with 150K. Now, it's important to note that they are not actually funding your account right off the bat. What they are doing is they're giving you an initial amount of simulated funds. In other words, they're giving you a demo account, which they're going to test you and see how you perform. Now, keep in mind, with 30K account, 50K account, 100K account, 150K account, those are demo funds. And guess what? Your fee will actually go up based on how big your demo account is. Now, if you look at it, you have different profit targets based on the size of the account you have. In terms of the profit target, it's relatively the same across the board. Your average target that you're looking for is a 6% gain on whatever size demo account you're taking. And in terms of the daily loss limit, that comes out to about roughly 2% each time. So when you start to look at this, it kind of really doesn't matter which size demo account you're trading with. You still have the same profit target of roughly 6% gain and a roughly 2% daily loss limit. So to me, it doesn't really make much sense to spend $375 a month to trade a 150K demo account when I can get funded by starting with a smaller monthly fee and still have relatively the same parameters. Now, keep in mind, you have to keep going on this program, keep paying that monthly fee until you meet these requirements. So if it takes you a year, you can spend $1,800 a year just to get funded. And if you think about that for a second, just consider the fact that on average, over an entire year, only 10% of the traders are profitable. This is a fantastic business model, knowing that on average, 9 out of 10 people are going to be paying in your program, and you really don't have to worry about funding these traders in the future. It's super important to understand that when you understand this business model. Now let's examine their two-step evaluation process. This part also doesn't quite seem to make much sense to me. They have step one, which is prove profitability. So you have your profit target. The minimum days that you have to reach your profit target is 5 days. And then I have to show over another 10-day period that you are managing risk. So you can be funded in as little as 15 days. Now I want you to think about that for a second. Let's just say you have $1 million in a bank and you have somebody who you've never seen before, like a trader that comes to you. They offer you no prior track record. Is 15 days going to be enough to really kind of establish a good baseline that they are a consistently profitable trader? Not even close. Keep in mind, on average, 25% of Forex traders are profitable in any given quarter, but at the end of the year, that number is only about 10%. So you could have somebody trading for a 3-month period where their strategy works great, and maybe you only watch them for 15 days and their strategy is working great. And then you fund them and you give them your money, but then all of a sudden their strategy isn't working. 15 days is not enough to establish that a trader is consistent or profitable at all. So why would 15 days be enough to establish that somebody can be a profitable trader that you want to invest in them? It isn't, in my opinion, but it is a great way to get people to sign up for your program, dangling the carrot. Hey, guess what? In as little as 2.5 weeks or so, you have a chance to get get money from us. To me, that doesn't make much sense at all. There's nobody on the planet that I'm going to fund just from watching 15 days of their trading. Now, one other thing I want to look at is these kind of statistics that TopStepTrader shows on their page. And while I think it's great that they're starting off and showing some statistics, in my opinion, it doesn't go further enough to paint a more accurate picture. So let's examine these statistics. First off, over 1,000 traders were funded in 2018. Wow, that sounds really impressive. Okay, fastest days to get funded, 15. Average 90 traders per month. Represented from 161 countries. Okay, great. But what does that really tell me? In my opinion, some more extensive statistics to actually paint a really clear picture would be, hey, of these 1,020 traders that we funded in 2018, this is how many are still funded today. That would be one important statistic to know, because if I fund 1,000 traders, but only 50 or 100 are still funded today, that tells me that 9 out of every 10 traders I'm funding is not able to maintain profitability over time. Why aren't they sharing this statistic? If it's a really good statistic, they should be publishing this to say, hey, not only do we fund accounts and show that we can have traders make money, but they stay funded with us over time. Yet they're not sharing this statistic, which to me raises doubts and questions. Also, another statistic that I think they should be displaying is, hey, of all the funded trader accounts that we have in 2018, the average account was funded for X amount of months or X amount of years. That would tell me how long, on average, I should, as a client, expect that I can maintain profitability. It kind of goes to the first question. It doesn't matter how many accounts you fund if the majority of them are getting defunded within a short period of time. So to me, this is a statistic they should be publishing to really kind of communicate more of how their program is working and how long a funded trader actually stays funded with them. So when I look at these statistics and these numbers that they put up here, to me, this is a really insufficient picture to understand how well their program is working and how well their funded traders are doing. If their funded trader process is a really good process for evaluating traders and their traders are consistently making money and staying funded over time, well, then I would want to be displaying that statistic. That to me would just go further in terms of proof of concept, and it would also communicate to you, wow, their average funded trader stays funded for 2 or 3 years. Wow, that's really fantastic, versus, oh wow, their average funded trader is only funded for 90 days and then they have to go back into that monthly program pay again. That's communicating a totally different picture. We don't even know how many traders are actually profitable over a 12-month period that have actually been funded. So to me, these statistics go way short of any sort of bar in terms of establishing how good their program is. So overall, in my opinion, when I evaluate the TopStepTrader, I do not give it a pass. I don't think it's sufficient. I think it lacks a lot of details in terms of how well their traders are doing, and their qualification process to me is not sufficient on any sort of professional level. There are thousands and thousands of traders who can make money over a 15-day period, but the amount of those traders that's going to be profitable 6 months, a year from now, is going to be a fraction of those who made money over a 15-day period. So to me, this program does not hit the mark. Another program that came to me actually today was called FTMO. I had not heard about them until one of my students mentioned it to me, but I decided to look at their website and try and see what was going on with the program. And from what I can see, honestly, I don't see it as being that much different than TopStepTrader. What do I mean by that? Well, first off, let's take a look at this here. So what is their funding process like? Well, they have a challenge period, a verification period, and then they actually fund you here. So the challenge is the first step of the evaluation process. You need to succeed here to advance into the verification stage. Prove your trading skills and discipline in observing the trading objectives. Okay, that's pretty straightforward. The evaluation period continues within the verification. This is the second and last step towards becoming a FTO funded trader. Pass the verification period and get ready to trade our funding partner's capital. So you complete these first 2 steps and then you become a funded trader. When you become a funded trader, you trade risk-free and receive 70% of your profits, be consistent, and you will get even more capital trade. Sounds fantastic, right? Well, let's look at some of the details. Here is your know your trading objectives. So here's the way it works. Step 1 is a challenge period of 30 days, longer than TopStepTrader's 5 and 15 day or 5 and 10 day period, but it's still only 30 days, which to me is insufficient. So the trading period in step 1 is 30 days. You have to have a minimum trading days of 10 out of 30. So, okay, that sounds pretty decent. You know, you want your traders to be active. Positive days 50%. This part to me doesn't make much sense, to put some sort of arbitrary requirement that my trader has to be winning 1 out of every 2 days. If I have a trader that only wins 1 out of every 5 days, like maybe they're only profitable on Monday and they're not profitable on Tuesday, Wednesday, Thursday, and Friday, but they're still making 5% a quarter, why wouldn't I want to fund that trader? That trader at the end of the year is making 20% a year. They're beating out most hedge funds. I personally don't care how profitable a trader is in terms of days. What I care about is that that they're net profitable over a quarter. Obviously, over time, I'm going to work with them to improve the number of days that they're profitable. But to me, this arbitrary requirement that they're profitable 1 out of every 2 days doesn't seem to make much sense. The other thing about it is this maximum daily loss. So they have this normal risk profile and an aggressive risk profile. Now, looking at the aggressive risk profile, you can start off with a $50,000 demo trading account. Your maximum daily loss cannot be more than 10%. And if you're under the normal risk profile, your maximum daily loss is half that, so 5%. Okay, so just to be clear, when you compare this maximum daily loss to the maximum loss, they can basically have 2 losing days at their maximum loss, and then guess what? You've no longer passed the challenge. You're going to have to start this whole thing over again. 2 days of losses and hit your max risk tolerance, to me, is not enough buffer to establish that. Many traders will have 2 days of losing streaks. That's very common. Even some of the best will hit their max risk tolerance for a day, 2 days in a row. So to me, this requirement doesn't seem to make much sense. Keep in mind, the way this program works is very similar to TopStepTrader. You are going to pay a fee during this particular 30-day challenge. So for 1 month, you're going to pay 345 euros, and that fee goes up or down based upon the size of demo account that you are trading. So just like the TopStepTrader, I don't recommend necessarily starting with a larger capital demo account because you can still establish that you're a profitable trader while paying the smallest entry fee possible. Now, step 2 of their verification process is a 60-day period. So now you have a total of a 90-day period where you're being evaluated. While I think that is better than the 15-day period being offered by TopStepTrader, I still don't think 90 days is a sufficient period. The other thing about this program is it doesn't really clarify the minimum number of trades you need to be making. If I only make 1 trade over that 30-day period and my trade is like a long-term trade and it's up half the trading days and it's down the others, you're going to say, I met the qualifications of that. That doesn't seem to be making much sense. You don't have sufficient of data statistics to determine whether this is a solid baseline that you can rely upon or not. So to me, when I look at all of these qualifications and the way they define it, I don't really rate this above TopStepTrader. They do have a slightly longer verification and testing period, but to be honest, they don't really clarify their parameters enough, and I don't think it's sufficient enough, so I do not rate this as a pass. The next program we're going to evaluate is the 5%ers. This is something that one of my other students brought to my attention. They actually said they've liked this program so far, but when I started to look in the details, I think this is better than the prior 2, but I think it falls short in some areas, so let's kind of get into this. So what they say is, look, here's how it works. Very much like the other programs, we assess your trading skills over an evaluation period. Then step 2, get paid to trade with some of our funds. If you pass the evaluation program, fund you with our capital and you will gain from the profits. Step 3, you can grow your account to beyond 1 million. Sounds like a pretty good deal, but now let's look at the evaluation program. So very much like the other programs, you will choose what size program you're working with. The good thing about this one is it's a one-time fee, so you can have a $52,000 account, $40,000 account, or $24,000 account. It's a one-time fee. They have clear targets, drawdowns, all these max exposures. This is all fantastic. The difference is that you actually have to trade a live account to qualify to get this size funding account. So you have to have your own capital to just even qualify for this, meet their requirements in terms of your target, drawdown, everything. And if you do that, they will fund you with this size account for this one-time fee. Now, again, if you think about it from a business perspective, let's just say I have 100 traders who happen to have $13,000 available in a live account to trade and test out this program. Well, that means for every 100 traders that even apply to this, I'm going to get $55,000 in income from them, knowing that 9 out of 10 of them are probably not going to even make it to the qualification phase or past the qualification phase to get even funded. At best, I have 25 out of 100 that he can even possibly meet the qualifications to get funded. That's the amount of people that are profitable in every given quarter. But even then, they may not meet your drawdown or targets or max exposure. So maybe less than half of that 25 is going to actually meet your requirements. So 88 out of 100 people are basically paying me just to try my program and potentially get funded. This is a fantastic business model. Again, I'm not saying there's anything wrong with it. I'm just saying from a business perspective, it's important to understand how these programs work. And again, this is all just my opinion and analysis of this particular program. Now, what's important to understand is while they have these low risk programs here, they also have these extended drawdown programs. So if you're someone who likes to risk more and you want to actually take bigger risks, guess what? They have a funding program for you. And guess what? The fees go up substantially. In some sense, this is really intelligent from a business perspective because if I know if somebody is more likely to take bigger risks, their chances of also profiting are probably going to go down. So this is basically saying, hey, we'll give you a chance to trade your own live money of $15,000, pay us $1,200 one-time fee, knowing that, hey, guess what? You want these bigger risk limits. If you do happen to hit your profit targets, well, we'll fund you and we're going to give you a smaller size account, knowing that you're going for bigger risk. Now, one thing I do like about the 5%ers more than the other two programs is they're much more detailed about their programs in terms of participation, the description, terms of the program, minimum requirements, program conditions and requirements. They really get into more detail about this, instruments you can trade. They get into more detail about profit targets, risk requirements, and everything. I think that's fantastic. Now, one part that stands out to me is the minimum active trading days. So here it says, during the entire evaluation period, traders must demonstrate trading on predefined active trading days. Okay, it sounds reasonable. Trading day counts once the trader submits an open trade and at any time during a specific day. The PM partners are required to have 4 minimum active trading days an entire month. To me, this kind of stands out as a little dubious in the sense, not necessarily nefarious, but more of you're trying to say that as long as their trader is only trading at least 4 times a month, you think that is a sufficient number of trades to evaluate how well the trader is doing? Over a 6-month trading period, that's only 24 trades. 24 trades is not sufficient to establish a baseline for a trader. Even if you take 100 trades as your minimum baseline to kind of establish profitability, consistency, the ability to maintain discipline, risk management, at this pace, you're talking 2 years before you have that 100 trades to even know whether they are going to be consistent or not over time. So to me, this part really isn't sufficient in terms of establishing a proper baseline for traders. Now, one thing I do like about their program that I think is better than the prior two is their time limits. So the evaluation period is limited to 6 months. Now, to me, that is a much more sufficient amount of time to establish a baseline in terms of how well they're performing over time, day after day, week after week. Are they being consistent over a decent amount of time? Assuming that they're decently active on a daily or weekly basis and they have a sufficient number of trades, I think 6 months is kind of early, but I think it's about the absolute bare bones minimum that I would want to evaluate a trader, whether I would fund them or not. So to me, I think this is a little bit better, and I think it's an improvement from the prior two. Personally, I would rather choose more towards a year before I want to fund them, but if they're a highly active day trader, I have hundreds of trades to work from, and I can see that they're consistent across instruments they're trading, risk profiles, how they're trading, setups they're taking, and I have hundreds and hundreds of trades to evaluate, I would be open to possibly funding a trader within a 6-month period. So I think this is an improvement from the prior two. It's the best I've seen so far. So in terms of the overall analysis on the 5%ers, I don't necessarily give it a pass, but I don't give it a failing grade like the other two. I think that so far this is one of the best programs out there in terms of getting funded and how they operate. There are certain questions I have, and there's certain things that I don't think are sufficient in terms of number of trades, how their program works in terms of funding evaluation, but I think it's the best one we've seen so far. Now, there is one program out there, a funding trading program that I actually do recommend, and that is at SMB Capital. So SMB Capital is run by Mike Bellafiore and Steven Spencer. If you don't know Mike Bellafiore, he's done a couple of great trading books out there. I've talked and communicated with him personally. Super great guy, has a great vision for not just, trading the markets, but also how to help you become an elite trader. They've fleshed out the process. They work with a lot of technology and tools, and just their overall vision in terms of how Mike and Steven Spencer, the other co-partner there, are running SMB Capital, to me is top notch. If I ever had a trader that I was going to send to a particular prop firm, I would send him to SMB Capital first. In fact, one of my interns has actually just been accepted for an internship at SMB Capital, and just from the communication I've had with him, it is just, in my opinion, leagues above everything else in these other programs out there. There is no comparison. So SMB Capital has a couple programs. They have one program which is their SMB Foundation, part of their Edge, where it's just a super kind of fleshed out and developed program. So you're going to be exposed to written lectures, classroom lectures, training videos. I love this part, trading drills. Just like a golfer, they actually go to the putting green and the driving range and the short grounds. They're working on their drills every single day. It's exactly what they're doing with you as a trader in their program. They're going to put you through a lot of drills to kind of just build these skills into you, repetition, 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 until you wire these into your brain. Super fantastic. They're going to quiz and test you. They give you all kinds of technological tools, platforms. It's just a super fantastic program to help improve you as a trader and get you funded. Now, if I am correct, their program's been changing a little bit over the years, but if I'm correct, they have a program where you actually go to their offices and trade with them personally, or they have an online program, which I believe you can check out through tradingworkshop.com. You can view a webinar about how that program works and how you can sign up for that. So you have the option of going to and actually trading on their desk personally and training with all the traders there, or you can do it remotely online. Obviously, the in-person one is going to be more expensive. If I'm correct, it's around $5,000 for the in-person training program, and the other one is, I think, just under $2,000. The one thing I really like about their program is they're not saying, hey, we've never met you before, but guess what? In 15 days, you're going to get funded with us. No, they're not promoting a get-rich quick scheme, and they don't want people who are looking to get rich quick. They want people who are very serious about this, will treat it as a profession, will treat it as a business, will treat it like an elite athlete does. Now, again, I'm not speaking for them. This is just my interpretation of how they've described their program, but there is nothing in here that's about getting rich quick, because they realize that doesn't work. That just brings in a lot of kind of newbies and suckers who are going to hand over their money and who aren't going to take this seriously. If you really want to take this to a serious level and get funded with people who are going to take your trading to the next level, in my opinion, the SMB Capital program is the best program out there. Granted, it's the most expensive out of all of them there, but I think overall it is the best program available to get funded. And if I ever had to send a trader anywhere, I would send them directly to SMB. So what did you think of this video? This whole video came from a question a student had who was in these programs and wanted me to kind of give feedback on that. And so it's such an important topic, and I know a lot of people have asked me about this before, about funding options, ways that you can get funded, how do you go through this funding process, what things should you look for and not look for. So make sure to give us a like if you appreciated this video, and also leave your comments and feedback below. It really helps us out with the YouTube algorithm by subscribing to our channel and liking our videos and giving feedback on it. We really appreciate it as a small channel. It helps us to grow and continue giving these videos. So I hope you enjoyed this video. I'll look forward to your comments and feedback, and I'll see you in the next video.